Hey everybody, welcome to Mortgage Today for Friday, March 15th, 2024, and oh, what a day it was. UMBS opened down another 11 basis points this morning. A recent pickup in inflation isn't likely to shift the Federal Reserve policymakers' forecast for 3 interest rate cuts this year and 4 in 2025, according to economists from Bloomberg News. The Federal Open Market Committee will keep rates steady in the 5.25 to 5.5 range for the fifth consecutive meeting this week. For the fifth consecutive meeting next week, with policymakers reducing rates for the first time in June, economists say. A solid majority of survey respondents see Fed officials penciling in 3 or more cuts in 2024, while more than a third expect 2 or fewer. Fed Chair Jerome Powell and his colleagues will update their economic and rate projections at the March 19th and 20th meeting for the first time since December. The survey respondents expect only survey respondents expect only small tweaks to their outlook with no change in the projected rate path. CPI has come and gone, and things could certainly have been better and worse. That said, it's hard to make a case for a friendly rate breakout that doesn't rely on new downbeat economic data. Risk reward is not lower than it was heading into CPI, leaving options more open for both risk adverse and risk tolerant clients. We are starting to see more housing inventory for sale, according to the latest research from Realtor.com. New listings increased 15.8% year over year in the week ending March 9th. Active inventory was up 21.8% compared to a year ago. The median listing price was down 0.6% compared to a year ago. Industrial production rose 0.1% in February. January's number is revised downward from 0.1 decline to 0.5 decline. Manufacturing production rose 0.8%, while January was revised downward from a 0.5 decline to a 1.1 decline. Capacity utilization was flat at 78.3%. January was revised downward from 78.5 to 78.3. And the biggest news of the day, NAR has settled its commission lawsuits for $418 million. National Association of Realtors has agreed to pay $418 million in damages to settle the commission lawsuits. As reported by the New York Times, according to NAR, the settlement brings to end all of the litigation claims brought by home sellers in addition to the damages payment. The settlement also bans NAR from establishing any sort of rules that will allow a seller's agent to set compensation for the buyer's agent. Say that part again. The settlement also bans NAR from establishing any sort of rules that would allow a seller's agent to set compensation for the buyer's agent. Additionally, all fields displaying broker compensation on MLS must be eliminated, and there is a blanket ban on the requirement that agents subscribe to MLS in the first place in order to offer or accept compensation for their work. That is a seismic change, folks. For a short while this morning, it looked as if bonds would break up and over the 4.32 ceiling in 10-year yields, but trading calmed down and trended sideways at a narrow range for the rest of the day. It was a calm conclusion to what was otherwise been a damaging week. It was a calm conclusion to what has otherwise been the most damaging week since October. But don't let the calm fool you. It's likely to be calm before the storm, considering next week brings a new Fed dot plot for the first time since December 13th. At the end of the week, the UMBS was down 16 basis points on the day, ending up at 100.42. At 100.41. So at 100.41, that puts us right below that ugly Fibonacci line that was a hell of a ceiling for quite a while right there. And then we do have support at the 100-day moving average, which is basically coming up to present day. So it's going to be all about next week, and next week is going to be stressful, folks. Monday, got some housing data. Tuesday, the fun starts with the 20-year bond auction. Generally, 20-year bond auction isn't that big of a deal, but it's kind of the last time to trade things ahead of the FOMC meeting, which is on Wednesday. So the FOMC meeting will come on Wednesday. Then on Thursday, we get jobless claims as usual and a PMI. Then we also get a Barr speech, and then Barr speaks again on Friday, and Bostic on Friday. So it's going to be quite the eventful week. So rest up and focus on some things that we do have under our control, which is our own minds. And we have some great series about that going on our sponsor at, well, thatmakesense.com.